इंदिरा नगर का गुंडा तो आपने सुना ही होगा, लेकिन फूड टेक डिलीवरी का गुंडा कौन है? Zomato. So many of you might have thought to apply in Zomato's IPO, but you all know that allotment is a major issue. Well, in today's video, we'll try to find a solution to that. So the way to understand how Zomato works as a company is to follow a top-down approach. So I'm going to start with the penetration of the online food services industry in India and abroad. So let's understand what potential there is for such an industry. You'll see here clearly India's penetration is just 4% in the online food services. And you compare US or China, it's 9 to 13%. Now you need to think, will people move on to order food online more? But here is something interesting. If you look at the GDP of say China versus India, China is about 5x greater than India, but the food tech industry, which I'm denoting here, is actually 27x times. So now interestingly, even if India goes double or triple, it still won't be 27x because the population of China is much higher. So an interesting fact over here is that the potential of an exponential growth of the industry is very much possible. Analysts say that the food tech industry should grow at 25 to 30% CAGR over the next few years. You know what? You can even see that in the valuation of Zomato. This is the journey of Zomato, and you'll see that it started in 2010 with one single investor at a valuation of 14 crores. And then it's gone all the way in Feb 2021 to 38,698 crores. My goodness, यहाँ पे लोग को Series A नहीं मिल रहा है. They've reached Series J4. But of course, you can see that the industry is growing and Zomato's valuation is also growing. बीच में कभी कोई delivery boy पिट जाता है, कभी protest हो जाता है. There's so many things that have happened behind for them to reach this path. In fact, you can see it in the business mix of Zomato. So over here, you'll see that the company actually started off in the dining out space, right? So if I see dining out, and this is just 2017, right? जो अब भी हुआ है, just 3-4 years ago. You'll see dining out was 82%, right? Now in 2020, things are completely different. They have food delivery. Food delivery, interestingly, is 82%. So जो dining out का percentage था, that primary use case is gone, and now 82% is just delivery. One interesting thing is that the business is completely turned around in just 3 years. Well, I know you want to be part of this growth story of Zomato, but how do you buy the IPO before the IPO happens? कैसे होगा? How is it possible? Well, there is a public company that's already listed which owns 18% stake in Zomato, and that's InfoEdge, also known as Naukri.com. You have used their website when you didn't have a job.
Sir, may I? Yes, write down Hari Sadhu. H for Hitler, A for arrogant, R for rascal, I for idiot. That's right.
Naukri.com or InfoEdge, which is the holding company, owns a lot of other companies as well. But the 18% at the $5 billion valuation marks its value at about 7,500 crores, making it one of the largest shareholders on Zomato's cap table. Interestingly, Zomato isn't a company with only Indian users. You might be surprised to see this, but website traffic of Zomato only from India was about 30%. The rest was spread to countries like United States, Turkey, Australia, and even UAE. In fact, even I used Zomato when we were in Italy way back in 2015. So this company has global ambitions and also has executed it by having presence in all these different countries. Now, InfoEdge predicted that Zomato will do well, hence it invested in the seed stage But apart from just owning Zomato, does InfoEdge as a company sound interesting to invest in? Let's discover that. So normally a holding company either is really old and doesn't have any vibrant businesses. An example is like Maharashtra Scooters or IDFC, even Bombay Burma for that matter. It's damn boring and doesn't do anything innovative. But InfoEdge is very different. To me, it actually created the entire internet revolution we have in India. In fact, the businesses that it owns 100% of, मतलब पूरा business उन्हीं का है. I have real proof over here. This is the overall traffic for their recruitment business, and you'll see that these are all different competitors: Naukri, Monster, TimesJobs, Shine, and Indeed. The blue line is Naukri.com. Based on traffic, it is really outpacing all the other companies. Another example I have over here is their real estate portal. And over here again, you have 99 acres, Magic Bricks, Common Floor, and housing. 99 acres, although dipping over 19 to 2020, is still leading the pack against all the other portals, at least when you notice the overall traffic. And finally, we have Shiksha, and this is the last 6 months in millions. Again, the competitors are College Dunia and Career 360. Shiksha again leading the pack when you're seeing the total number of visitors. What I'm trying to say is this holding company actually owns and dominates its space really well. Another way to think about InfoEdge is that you're owning a company which owns a lot of other startups. Now, it's impossible for us to actually own all these companies because they're private, right? They're not public limited. But if InfoEdge owns such a portfolio, one way for us to own a venture capital fund like InfoEdge is just owning the holding company. So we've seen how InfoEdge functions, that it owns a portfolio of startups, its own 100% owned companies are leaders, and InfoEdge owns 18% of Zomato. But what effect does it have on its own financials? Let's quickly deep dive into that. So we have net sales over here. Very simply, the net sales of InfoEdge from 2016 to 2020 has gone from 747 crores to 1,300 crores. 12% CAGR in sales. Now, although net sales is growing at about 12% year on year, the interesting thing is the EBITDA, which is how much money it's left with. And you'll notice the EBITDA has a much better ROI or growth rate actually. From 2016, 80 crores, it's gone to 378 crores. Now, EBITDA over here, and I'll write it like this, 78% in CAGR. Another astounding thing about InfoEdge is that it's completely debt-free. It has no interest payments to be done. It has no EMIs to be given. It's debt-free. That is a really amazing feat for an internet company. The astounding thing about this company is that it has 1,200 crores in cash, as 1,200 crores in cash, and is virtually debt-free, which means it's cash rich. It can invest in new ideas, new companies, new verticals without being answerable to the bank where it has borrowed money from. This is considered to be a very positive thing if you're investing in a company over the long run. InfoEdge's stock has given a 42% CAGR growth. This is really large when you compare it against Nifty. So I'll write InfoEdge here, and Nifty, can you guess what Nifty's return was in the same period? Nifty's average CAGR is roughly 14.2%. That just means that this company is managed extremely well and is beating the index, which is usually considered the benchmark for all fund managers. Finally, let's talk about the valuation, something that will surprise you too. The P ratio for this company is a massive 200 plus. And the reason for this is that you can't value internet companies like you value normal companies. This is because the model of the internet is completely different from the old school model of normal companies. Let me put this into a little perspective for you. Normal companies will grow like this. You'll have expenses, the expenses will grow over a period of time. And then you'll have revenue. The revenue will also follow roughly what the expense is doing. This is what normal looks like. Now, what does the internet look like? I'll write it over here. The internet looks very different. It has large expenses in the start, and then those expenses normalize and increase very slowly. Whereas the revenue would probably start here and then go massively above a number you can't even see. So this gap that you see over here is the exponential move that an internet company has. Basically, the fixed costs are fixed, and every time additional revenue comes, that additional revenue does not have an additional expense associated with it. Hence, VCs and all of the investors tend to invest venture capital in internet companies versus traditional companies because the growth is exponential. So now you can catch the growth of Zomato by owning InfoEdge. Not only that, also the host of opportunities and other startups that InfoEdge owns. So if you find that interesting, check out InfoEdge a little more closely instead of just going for the Zomato IPO. If you like this video, please comment below. Otherwise, please like and subscribe so we can keep producing more videos like this.